This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a truncated week. 3 days to go for the long weekend. It's a Tuesday morning, and we are basically waking up to not so great global cues from overnight. The US was slightly lower. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, I love how in this week every day you remind us how many days to go before the weekend begins. But yeah, it's been good for the market, right? Holding steady at the 22,400 mark. Lots of money coming in from domestic institutions and lots of cues to watch.
Well, that's right. And it's beautiful weather here in Mumbai.
Yes.
It's chilly. I don't think it's been so chilly. Prashant, I'm sorry, I'm a Bombayite. But I haven't seen
the sweaters are out.
This sort of chilly weather I've not seen in Mumbai. And the other point is, guys, which asset class is not doing well? Bitcoin is making fresh highs, gold is making fresh highs, stock markets are doing well. Where's the pain?
It seems...
Real estate is doing so well.
It's a little worrying.
It seems all too familiar. It seems like 2021 deja vu, right? Everything is up. It's like this broad reflation which is playing out. And you're absolutely right. Bitcoin, by the way, is the best performing asset class in 2024 so far. So I think that tells you a little bit about what's going on.
Prashant, when you relate these moves, I sometimes get worried that you'll talk about 2008. At that point of time, I was chilling it, but you stopped at 2021, so it's cool. It was good enough.
Nobody wants to remember 2008, right?
Absolutely. Well, let's just quickly recap what you need to know as we begin another trading session. And I'll start with where we left off yesterday. Where we left off was on a very, very quiet, somber note. The Nifty was, for most parts, doing nothing. There were only very feeble attempts at a bit of a recovery, 40, 50 points in the Nifty. Actually, even that by the close did not materialize. The small cap index, though, was down 0.5%. So that is something to keep note of. And I've been making this point for the last few days that slowly but steadily in many stocks, a little bit of deflation, is happening. Air is going out in many pockets here and there. You're not feeling it because it's not broad-based, it's not coming with any ferocity, but stocks are giving up. For example, the market breadth yesterday was negative, some 2:1 for a Nifty, which was actually absolutely flat. More on that point a little later, but overnight, US equities, as I said, were a little lower. S&P was down about 0.12, the Nasdaq was down about 0.5% or so. So you had this new comment, right? There's always something new with Fed speakers. So Fed's Bostic basically suggested that the first Fed cut could be followed by a pause. Now, there is a lot of question mark in terms of when the first Fed cut will be. And now we're saying somebody at the Fed who's a voting member saying that, well, you may get one cut, but it's not as if it's going to be a series of cuts. Whenever that first cut happens, it perhaps will be followed by a pause, reassessment, and then the Fed will decide what to do. Yields perked up on the back of it. The 10-year was up about 4 basis points, 4.2% or so. By the way, the 2-year also moved up a little bit. Actually more than the 10-year. Oil prices, they fell nearly 1%. We are at about just under $83 a barrel. And for commodities, China is important. And in that context, today, the Chinese National People's Congress, the NPC, it's a big annual affair in China that will begin. And I think the only thing which financial markets are interested in is if you'll get a strong signal about what the authorities can do to reflate China. The problem, of course, there is general deflation, especially in the property sector. Nifty, just to kind of sort of recap some of the levels, not very much different from where we put out yesterday. Nifty is headed towards the 22,500 kind of levels. 22,538 is the Fibonacci extension. The support comes in at about 21,966. Because of the big gap, 350-point move on Friday, supports, of course, have fallen behind. The Nifty Bank inched higher yesterday. It broke the swing high of 47,363. We left off at 47,456. It can head to 47,750 in the near term, in the short term. And supports come in at the 40-day exponential for the Bank Nifty, which is 46,425, and then the 20-day, which comes in at 46,351. So maybe once again, perhaps a little quieter on the indices, frontline indices. That's the GIFT Nifty for you. But so many stocks perhaps will be in focus. There is Tata Motors, there is IIFL Finance, there is, of course, that insurance story that we spoke about. There are hospital stocks. So it's a very stock-specific kind of action that I think we are going to witness once again this morning. Sonia.
Oh, absolutely. And, let's put this into perspective, right? The Nifty has been doing very well, not just today, yesterday, but if you map the trajectory in the last 1 month, I mean, now, of course, the Nifty is holding firm at the 22,400 mark, but it's been a 600-point rally that we've seen, 630 points to be precise, in the last 1 month in the Nifty. So we've covered so much ground, both in terms of price action as well as the kind of money that has been coming into this market. So look at what's happening with the domestic institutions. Just in the first 3 days of March, domestic institutions have bought 7,300 crores in the cash markets. And where is the money being pumped in? To a lot of stocks that have been seeing huge gains. So Tata Motors, for example, of course, you had that big news flow yesterday that Tata Motors has finally demerged its passenger vehicle and commercial vehicle business into two separate entities. But a lot of analysts believe that a lot of this perhaps is already in the price. Because if you look at what's happened to Tata Motors, the performance in the last 1 year, JLR margins, for example, in FY22 were 9%. Now in FY24 have risen to 16%. Also, Elara Capital put out a note where they said that large part of the re-rating for the India passenger vehicle business for Tata Motors was accounted for post the TPG deal for the electric vehicle company. So yes, this news flow is positive, but perhaps a lot of it is already in the price. We'll wait and watch today. A couple of other stocks in focus, Macrotech Developers. I mean, the entire real estate space has been surging, and now sources indicate that there could be a 3,300 crore QIP from Macrotech Developers. IT stocks could be on the back burner today because CLSA has downgraded tech stocks like TCS and HCL Tech to a sell from an underperform. That would be interesting to note. Keep an eye out on these stocks. And, as Nigel was also pointing out, all asset classes are doing well. Gold has now, I think, gone over 63,000 rupees per kilogram. So watch out for that. And Bitcoin has surged past $67,000 for the first time since November of 2021. It's very close to all-time highs of $69,000. And in April, there's a big event that's coming up, which is called Bitcoin halving. It comes once in 4 years, where the supply of Bitcoins are halved, because of which the demand-supply skew causes a rise in the prices. There's also the Bitcoin spot ETF that was launched, and that saw big inflow of money. There are now talks of the Ethereum spot ETF coming into play as well. So all of this is causing this asset class to come back into action. But overall, for our own markets as well, looks like the run has been good.
Well, that's right, Sonia. The run has been very, very good. And for the Nifty in particular, because the Nifty has done very well in the last 1 month, as you pointed out as well. But what's not doing so well is the small cap index. And the last 1 year belonged to small caps because they gained big time. Now, in the last 1 month or so, there's a relative underperformance that's coming in from the small cap index. And yesterday as well, you saw a couple of stocks that moved up, to a great deal. But delivery-based buying really wasn't there. So there appears there was some short covering. There was some speculative action as well that continues in the broader market. So for the month of March, the sense you get is maybe it'll belong to the large caps and not the small caps. What do the FIs do? Well, the swing factors close around 10,000 contracts. They added 5,000 longs and they covered 5,000 shorts. So if you pull up the chart, you'll see, in the last few sessions, from more than 60,000 net short contracts, that's gradually come down to around 50,000 short contracts. So some covering has already taken place, and that swing factor has already taken place. And yesterday, it was to the tune of close to around 10,000 contracts. What about the options data? There appears as a short straddle at play at around the 22,400 mark. What's that? You write the call as well as the put of the same strike, and you pocket the premium. The premium is roughly around 250 rupees. So it appears the near-term range, that is the expiry that will play out on Thursday, it should be in this vicinity of this 500 points approximately, because you take 22,400 and you deduct this 250 and you add 250 as well. So that's how you get the range out there. That's on the Nifty. On the Nifty Bank, yesterday it came to that crucial resistance level. But I would like it to take out this mark decisively, because the last time around we went to around this 47,500 odd mark. We couldn't decisively conquer it, and then we did see a bit of a pullback. The 50 DMA, that's far away from here, but in case you want a reference point on the downside, that's one for you. The Nifty Financial Services Index as well plays out at the weekly expiry, so keep an eye out on this index. Second half of trade, it could be fairly active. It's a Tuesday. You normally have, the weekly expiry that plays out for the Nifty Financial Services Index. The stock that I'm tracking today, two of them. One is Muthoot as well as Manappuram. Why is that? Because RBI has, pressed the brakes on IIFL's gold lending. So that's one factor. The second factor is that gold prices itself overnight were making fresh highs. So that's what helps sentiment as well. And I'll keep an eye out on both these two, because now the opportunity could be there. And for Muthoot in particular, the yield that they take is close to around 18% approximately, which is similar to what we see on IIFL's gold finance book. So keep an eye out on both these two stocks. The uptrend is pretty much intact, but I think in the near term, maybe the Nifty could be in that range of around 400-500 points out, guys.
All right, thanks a lot for that. So lots of stocks in focus, right? On the equities front, we have Ridham Desai of Morgan Stanley, who says that Indian equities have fundamental support, albeit the valuation arguments persist. He says the market could always correct, but they expect bids at lower levels. He says the bull market will unlikely end without signs that fundamentals are worsening. They are overweight financials, technology, consumer discretionaries and industrials, but they are underweight other sectors. That said, Ridham adds the macro trade could peak in the coming weeks.
Okay, well, some money market views. This is Abhishek Goenka of India Forex and Asset Management, who says that net FPI flows into debt has been positive in all 11 months of this fiscal this year. He says overall sentiment is upbeat post better than expected December quarter GDP. He adds there is optimism around revival of private capex. He says we may continue to see a steady stream of FPI flows into domestic debt and equities if global risk sentiment remains stable. RBI continues to play a very active role in both spot and forwards, resulting in rupee remaining extremely range-bound, and he's expecting rupee to trade between 82.5 to 83.2 to a dollar in the medium term.
Okay, and on the bonds, Vishal Goenka of IndiaBonds.com says bond markets will remain in a narrow range given lack of any imminent economic data. He says volatility in the US and EU government bond markets have significantly subsided as well in the past month. He says, as we are in the last month of the financial year, do not expect any major directional move in bond yields. He expects the 10-year benchmark bond yield to trade in a range of 7.04 to 7.09% today.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Tata Motors, Macro Tech, AU Small Finance, BEML, Mishra Dhatu, and Z. All of them will be reacting to positive news. But on the flip side, you have IIFL Finance, DCB Bank and Bharat Forge that will be reacting to negative news. And you have some news at the bottom of your screen as well. Godrej Properties, they have been declared the highest bidder for a land parcel, so keep an eye out on that one as well.
Absolutely. Well, we'll get to many of these stocks in detail in a bit from now.